Hello, everyone, and welcome to the Santa Clara County real estate market analysis for January of 2023. This is where we take a look at how we've performed for the month, compare it to previous months and to the same time last year, so that we might be able to get some better insights into what to expect from the market and also to gauge where we are by looking at where we've been. So let's take a look at those numbers. We're going to start with the total active listings, which is the usual number that we start with. Now, just to sort of clarify what you're looking at here, this chart shows two things. One, it shows the month of January of 2023 compared to the month of January 2022 on the far right side. So that red column is the January of last year, and the column to the left of it is the January of this year. I like to put that there so you can just visually compare those 2 months to each other, because understanding the change year on year is going to be far more informative than just looking back compared to previous months. Then, of course, at the same time, we're able to review what the different changes have been month over month leading up to January of 2023. So let's go ahead and pin down those numbers. From January 2022 to January of 2023, we saw a 44% increase in the total number of active listings. And so equaling 1,011 for 2023 and 704 for 2022. So from this, what can we see in terms of trends? We're seeing the peaks in the typical times. We're seeing the inventory of homes rising at the times we would expect them to rise. Now, when compared to the same time last year, we're tending to see the same trend between December and January of last year. We definitely saw an increase, and that's also been true of previous years, so that's very much normal. But notice the difference here. We went from 517 to 704 between December 21st and January of 2022. However, this time around, we only went up from 943 to 1,011. So about 60 difference versus almost 200 difference. So much more of a mild increase between December of 22 and January of 23. And as a percentage, it's obviously a much smaller number than the same time last year, since our numbers were so much smaller last year. But I think that's an interesting trend to note. And I wouldn't be surprised if we see that continuing, that we see more mild increases in terms of the amount of inventory that we're going to be holding on to. Who knows? We may see some big jumps perhaps in February and March. But right now, we're seeing what is likely to be a pretty stereotypical increase for the first quarter of the year. And last year, we can see we just ramped up from January all the way till July when we peaked at 2,080. And I don't believe we'll hit those numbers by any measure. We'll still be far below what was last year. But we are now going to also be starting to hit this time of year in 2023, when 1 year earlier was not the crazy market, right? We are still at the point where 1 year ago, interest rates were very reasonable. They were very low. So we haven't yet seen that hit on the year-to-year comparison. I think the numbers will get a little bit more mild. I don't think we'll see these dramatic fluctuations year on year once we get into those, simply because of the influence of interest rates. But it'll be interesting to see how that unfolds as we move forward into 2023. All right. Next, let's take a look at the total number of new listings. Now, these are folks that decided to list their home in the month of January of 2023. And this reflects in that month, they entered it into the MLS. And we can see that between January of 2022 and January of 2023, this has dropped by 27%. So 27% fewer sellers decided to sell, or homeowners decided to sell their homes in January of 2023 than the same time last year. So last year, that number was 1,170. This year, it's 849. And again, if we just do a comparison between December of 2021 and January of 2022 last year, to sort of try to spot the trends, we can see, first of all, that's the beginning of a trend where things ramp up right up until March, where things tend to flatten out in terms of new listings coming on the market. And this year, we're seeing the same thing. Between December and January, we're seeing a fairly reasonable increase. It actually looks like an increase that's on par with the same time last year. So at least in terms of the percentage increase. So we'll see how this pans out. But in terms of overall numbers, it's obviously lower. But in relation to the month before, the amount of growth seems to be on par with what we would expect if we're trying to figure out what's going to happen in the future based on what we saw last year. So given that, what do we expect to see in February and March? I would expect to see another increase in homes added to the market, and then a big increase between February and March if we see a repeat of the sort of trends we saw in 2022. In terms of homes sold, now this is the total number of homes that actually closed escrow in the month of January. Now keep in mind, this is not the month when the offers were made and accepted. This is a scenario where someone makes an offer on a house, and typically it takes 30 to 45 days after that date for the home to actually sell. So these are numbers for homes where the offer was accepted probably in the previous month or potentially even in the month before that. So it could have been December or November that these offers were made, and it just took this long for them to close. So this is always a little bit of a lagging number, but it's a good measure of how many homes are actually closing escrow versus plenty of homes go into escrow and then do not close. But these are actual closed deals. Now, this was a decrease of 45% from the same time last year. So last year we saw 763 homes actually sell in the month of January in Santa Clara County. This year in 2023, we saw 418. So far fewer than last year. And if we're trying to figure out trends, last year, again, we saw between December and January a decrease, as we saw this year, but it's a much bigger decrease last year in January, which is kind of interesting because remember, things were still kind of hopping then. And then this I'm referring to just to its relative position to the months before it and after it. So we had a pretty big drop in January of 2022, and then just continuing increases up until April in terms of homes that sold. And then it declined fairly steadily from there to the point where we are now. And remember, March is right around when this started to happen in terms of interest rates going crazy. So it's typical, I think mentally, not only did we see a drop in the number of homes that sold, because there are folks who into the process may have had a problem or made an offer and didn't lock in their rate. So I think that rate hit started to hit right around April or in May, because remember, you lock in your rate for 30 days. So folks who locked it in, say February or March, probably were okay, but then we would expect to see a bigger drop. And indeed, we do see that in July. So that seems to be the month where that particular influence in the market actually hit us. Now let's go ahead and look at original list price. Now, this is a number I tend to focus on that most real estate agents don't, and I think it's important because it gives us a little insight into the psychology of sellers as they're coming onto the market. This is the amount that was being asked for the home at the time it was listed. So that very first price that got put into the MLS when it first listed, that's what this price is. This does not include any price increases or decreases after it was listed. This gives us some insights into what expectations were on the part of sellers. How much were they expecting to get compared to the same time last year? And in Santa Clara County overall, sellers were expecting to get 12% more on average for their home than the same time last year. We can see that things have been relatively flat for quite a while in Santa Clara County, going all the way back to June and July with a trend upward from December to May, and then sort of peaking out there and sort of just gradually jumping up and down a little bit as we moved through 2022. So no real trends I think we can pull out of that, other than to say over the last few months, over at least the last quarter, things have been relatively flat in terms of expectations on the part of sellers. But as we're going to see here in a moment, sales prices, we're going to see that those two numbers are a little bit too disconnected. If on average folks expect 12% more, and when we review what we're seeing in sales price, we'll see there's a disconnect there. So there's still some folks who need to calibrate to the new realities of our market in Santa Clara County. So what are those numbers? Right now in January of 2023, the average original list price is $1,796,892. I realize that's a crazy number. In January of 2022, that number was $1,599,342. And again, that's a 12% increase from the same time last year. And remember, this isn't what anyone paid. This is what sellers were expecting. Okay, so now let's look at sales price. We can see sales prices are actually down overall, and in this we can see a trend. While seller expectations have been relatively flat, the amount they're actually going to make has gone down, starting really in right after March, right when we would expect it to. It started to hit really in May and June and right into July, and then we saw a dip where it went down and sort of flattened, and we've been wavering a little bit, but it has absolutely been trending down since the middle of last year. This year, in January of 2023, the average sales price for a residential home, and this includes single-family residential, condo, and townhome, was $1,638,302, and last year that was $1,658,200. That's a 1% drop from the same time last year. So instead of getting 12% more on average, they're getting 1% less on average, at least in the month of January. So when you see that disconnect, you realize that there still need to be more price reductions in the market, and sellers that are coming onto the market really need to be paying attention to what they're listing their home at. We are no longer in a market where sellers want to chase a price. You don't want to come in with the philosophy as, well, we can always reduce our price, because the more you wait, the more you'll have to reduce your price to get it sold. So you're losing money with every day that you delay in calibrating yourself to what that list price should be. Okay, percent of list price. Now this is a great number because it really calibrates us to more of the buyer's mindset, right? So at the time, and this is based on what the price was at the time the offer was accepted. So buyers were coming in, making offers, and this year, on average, they were paying 99% of what the asking price was. So 1% below asking price on average in the county. Last year at this time, that number was 110.6%, which basically means buyers were paying 10.6% over asking price on average in Santa Clara County. Now, that's an 11.6% drop from the same time last year. And just take a look at how quickly this changed. We saw it peak in March of 2022. I don't think it's a coincidence that that's the month when it peaked, but then it sort of was flat for April. Then it took another dip in May, and then it took a big dip in June, going down to 106.1. And then in July, it was at 101.4. And ever since July, for the most part, sellers have been getting below asking price, with one exception in September of 2022. I don't suspect that we're going to see a huge change in this trend in terms of sellers having to take below asking price. The reality is there just are not enough buyers out there that are making multiple offers on various properties. And this number, the fact that it's below 100%, does tend to indicate that we are not in a market where multiple offers are common. Are there markets out there where multiple offers are still happening? Absolutely. We have so many submarkets in Santa Clara County that this is just really a 10,000-foot view, but gives you a good idea of the overall trend going on in our local market. So again, this calibrates us to what buyers are thinking, and buyers are clearly in the driver's seat in terms of being able to make offers below asking price, but not so much pressure that, at least on the seller side, they are accepting offers far below asking price. As we see, these are selling at 99%. We're not seeing dramatic drops like to 95 or 94%, which is something we were seeing in the downturn, say 2007, 2008. The years after that, we were seeing very big cuts into what folks were getting compared to their list price. Next, days on market. This is another one where the trend is not hard to spot. It's absolutely been skyrocketing since April, May, which again isn't a surprise. It's all timing perfectly with when we saw interest rates go crazy, where interest rates basically doubled and tripled. Last year, it was 17 days in January. This year in January, it's 35 days. And I've mentioned this before, but I think the magic number inside of a seller's head is 30 days. Once you've been on the market for a month and you haven't gotten either a serious offer or gone into escrow and then had it fall out or anything, you just haven't gotten any traction, I think that that's when sellers start to think we need to consider all of our options in terms of getting this home sold. And the biggest, best, easiest option is price, right? That is the one thing you can absolutely control in short order to be more competitive in the marketplace. So that's usually where you need to start. And we've hit that 30-day mark now since December. We hit 29 days in November. And again, this is the average, but this is a conversation that sellers should be having with their agent long before you hit 30 days. You should have known what the average days on market was in your local market when they did that comparable market analysis, and that would be very customized to your location of your home. And if you don't get the kind of level of activity that the agent would expect after just a week, you should be having conversations, right? And there's a lot of things your agent can see to help you figure out what's going on. They can see how many views on Zillow has it had, how many folks have saved it or favorited the home, all of this kind of, how many people have reached out to them for more information or more disclosure data or anything like that. These are all things that I know most of us track. Some of us maybe don't do it every time, but I know for me, I kind of have a formula figured out where if I don't see those kinds of inquiries in the first week or 2 weeks, we need to start having a serious discussion about why we're not getting the level of attention that we would normally get. So something to keep in mind as you go through. And again, That's a 106% increase in the same time last year between January of 23 and January of 22. And again, this trend, I think, is going to continue to go upward. It's showing no signs of slowing down. We just had this number go up in January by a pretty good chunk between December and January. And I think we'll continue to see that going into 2023. Now, this is Santa Clara County price reductions. This is the number of homes that have had a price reduction in January. This month, it was 23.4% of homes on the market had a price reduction. In December, it was 34.4%. And I think we continue to see this number dropping simply because as the market gets more calibrated, existing stock will reduce its price, and stock coming on the market through listings will be priced more appropriately given the realities of the current market in most cases. So it makes sense to me that this number should be dropping. We saw some fluctuation a few months ago, but now it has sort of settled into a point where I think we'll likely see this being this number or less in the coming months. It'll depend on what expectations are, and we'll see if the listing price that we're seeing continues to be out of whack. Remember, the listing prices were expecting 12% more than last year when they should be expecting 1% less. So obviously, those are all homes going onto the market that are likely going to need a price reduction going down the road. So we'll see how this plays out in the coming months. Now, to talk just a little bit more about price reductions, I wanted to give you sort of a breakdown for the county by letting you know the average price reduction, and that average price reduction was $237,717. The median, which is the point at which half were above and half of the price reductions were below, was $100,000, and the highest price reduction was $3,799,000. And there's interesting, strategies to look at with these. It's a little bit crazy. These are obviously some properties that have that started with extreme prices that are at this very high rate. But what's interesting is the level, because we're talking about homes that were originally listed at, say, 4.9 million that were then dropped to 1.1 million. And as I look at these are all on the same street. These are all properties right next door to each other. So this feels like someone who perhaps bought a property or built or bought a block and remodeled and did some work. They all listed on the same day. They're all in the same boat, but just had a dramatic drop in asking price, which is kind of stunning. Which obviously brought the average way up with these three properties. Some of these homes have sold. Here's one home that was on the market for 192 days that had a $304,000 price drop. That's clearly, and that was something that probably should have happened sooner. Another one on 60 days, which is a little bit more reasonable, was dropped from about 1.5 to 1.3 million. And that ended up selling for over asking. So they did a good job there. They hit the market at a point where that generated enough interest that they actually ended up getting an offer that was accepted that was over the asking price of 1.299 million, which is after the price reduction. Another home that sold was after 52 days, originally listed at $1,399,000, dropped to $1,249,000. That ended up selling for $1,255,000. So again, another one that sold over asking price because it was appropriately priced eventually. Next, we had a home listed at $750,000. And this one's interesting because, and the reason why I'm sharing some of these with you is I think this one in particular shows what can happen with price banding. It was originally listed for $750,000. They reduced the price to $600,000, and it ended up selling for $710,000. So at $600,000, it generated enough interest that multiple offers came in that pushed that asking price back up to almost the original list price. So that's an interesting dynamic that happens. And in different price bands, you'll see this where they clearly probably ended up falling into a whole nother size of a bucket that buyers are searching, right? By going from 700 to 600, they were probably popping up in a whole bunch more searches than before. And it was such a impressive home at that price point. It generated multiple offers that brought the price up above $700,000. So that's a good one on them. And they did that very quickly. They did that after just 8 days, or it sold in just 8 days. So I think that's great that they're adjusting those things to get this done. Another home after 221 days on the market finally sold for $1.239 million, which was about $10,000 below asking price after it had been reduced from $1.388. There aren't any other ones here that I think really demonstrate some amazing stuff, but the average days on market, because let's discuss that too, is also a crazy number to look at, Because again, these are conversations that folks should be having much earlier than we're seeing for a lot of these. So the average days on market is 95 days. That for all the homes that have a price reduction, the average days on market is 95. And these conversations need to happen much earlier. The median was 82, so 80 at the number 82, half the homes that had a price reduction were above 82 days and half were below. That is crazy high median for that. The max was 450. So we have a property on here that's at 450 days. Let's just see, 450 days, and it's had a price reduction of over $1 million. Still has not sold. It's not pending. Clearly, things need to happen in that market for that property to get sold. The lowest was 8 days, and we already actually discussed that property. So the correlation between being on the market too long and these price reductions is very clear. And in order for you to get over this hurdle, sellers and buyers sellers and real estate agents, their agents need to have discussions about how to tackle this, because they're just going to be chasing a price that is going to end up resulting in them getting far less. If you pick the right price today, you're going to get far more for your home than if you pick the right price in a month, because the right price in the month is going to be lower than the right price today. So hopefully that helps. The goal here is always to leave you with more knowledge on the table than we take up in your time. I hope we've accomplished that today. If you have any questions, feel free to reach out at my website, soldbyrobert.com. I've got a lot of great tools there for buyers and sellers. So feel free to reach out. Thanks again for checking it out today, folks. And I look forward to seeing y'all next time.